This is the first in a series of videos designed to help you to learn the basics of reading the premium. Now, to do this, we're going to start off with a 5-minute chart. We don't use a 5-minute chart when we're actually trading. We use a much faster chart, but this will again give you the basic principles. And as stated on the website, there is a direct relationship between the movement of the ES and the movement of the premium, so that if the ES is moving up to higher highs and higher lows, the same should be true of the premium. If the premium is moving in a direction opposite to what is happening with the ES, the premium becomes a leading indicator, helping you to understand that something is about to change, or is in fact already changing. If the market is moving down, you're getting lower lows and lower highs. The same should be true of the premium. Now what we have here is a 5-minute chart of the ES, the corresponding bars on the premium, and what you're going to be paying close attention to as the market is moving up, you're looking at the highs of the bar. Same should be true of the premium. When the market is moving down, you're really paying attention to the lows of the bar. The open and the close is irrelevant. Now, as the market is moving up, what we should be seeing in this little move, right? We've got progressively higher highs. We should be getting higher highs on the premium. And as you can see, right on this bar, which corresponds to the high, we have a lower high. Okay? It shouldn't be happening. That's indicating, in all likelihood, a divergence that's going to result in a drop in the Spoos. Now, when you're looking at relatively equal highs, or in this case, equal lows, the same should be true of the lows of the premium. So is that correct? We have a much lower bar here compared to the previous bar, so that indicates we're coming down. Now we have a divergence, a higher low, then a slightly lower low on the ES, but a higher low still. So that divergence would suggest that we should be going up. On the next bar we do. We move up a little bit more. But on the following bar we tag that low over here, but we have a much lower low on the premium. That's a pretty good indication that this market is coming down, because we're much lower on the premium here than we were over here or even over here. So that gives us a strategy. If the market does not immediately respond in that direction, it means that the Spoos should be returning to this price and or go lower, in which case now what we want to do is look for an opportunity to short that move. So as we get to this point here, on the very next bar, we've got a much lower high, a slightly lower high on the ES, and an opportunity to ride this down at or below that level. And as you can see, we drop even further. Then as we get to this next pivot, we're at a higher low once again, and an opportunity to go long. So overall, as you look at the moves of the ES and the moves of the premium, they should correspond directly. But when they don't, and they usually don't, that's when it's telling you something's going to change. Now, we have placed a moving average. We have 3 different moving averages in this indicator. One set to 9, that's fairly fast. One set to 27, and the other to 45, as you can see there. So that's what the number of bars back are tracking. And as you follow this simple moving average, it's a Jurek moving average, so I won't call it simple, but you can see that the premium tracks very well with regard to the moves of the Spoos. But when it doesn't, that's when it's telling you things are about to change. So if you looked at the slow moving average, the slowest, which is painted cyan for a positive move and red for a negative move. If you just follow that, okay, you can see how this market has moved up just by following this move. And here, now, premium is changing, and we're moving down, and we continue to move down all the way into the last half hour. Okay. So there's your trend. Okay. So let's go through that again by looking at the raw data. As we move up from this pivot point here, now we're not going to pay that much attention to what's happened over here. We're really looking at, well, what's happened since the pivot. That's important to keep in mind. We're getting slightly higher highs on the premium, and we're getting higher highs on the ES. But now you notice how this is beginning to drop. These highs are getting lower. So something's not quite right. But then we get another little move up from this pivot point here. Look at these bars, 1, 2, 3, 4, and we don't move as high up as we do here. So there's your divergence. And now look at how the next bar has really dropped. The highs of the bars have dropped, and you're getting lower highs and lower lows. It's corresponding. But now you get a little divergence, a little more divergence. It fiddles around up there, again drops, and then we get a much bigger drop here, followed by, look at the highs, a lower high here compared to the previous bar, a higher high, and then a lower high again, and then down she comes. Boom. Higher low, lower high, higher low, lower high, lower high, higher high, lower high, slightly higher high, lower high again. And down we go, boom, until we get to the next divergence. So if you just follow that, you can see how this is supposed to work. Just keep in mind, there's a direct relationship. Therefore, when the premium is not agreeing, when you don't see a corresponding move in the same direction on the premium as you have on the ES, the premium is forecasting the change. And that is what enables us to be so precise about trading the ES. And we're using just a 5-minute chart here. And as I've mentioned, we generally don't use a chart this slow, but it's good to learn off of, and you could trade the thing. You could trade it and still do pretty well. But we like to use a faster chart because we get much better entries, keeping in mind that while the highs and the lows of the bar, all right, are the key, those highs and lows are not necessarily happening exactly at the beginning or end of the bar itself. But overall, this works pretty well. Now, we use many other indicators besides this on reading the premium. The important thing is to read the raw data and to follow the pattern that's being established based upon what you see in the indicators. But when you're actually getting ready to pull the trigger, you got to look at the raw data. And that's what we want to teach. We want you to learn how to read the raw data. Now, before we go any further, just a really interesting aspect of reading the premium. You notice how we come up here to this high. We're at about 37 3/4, and right there at around 36 3/4 is where we see a change in the slope of the premium. And that downslope continues even after the market begins to move up. But it isn't until here that the slope of the premium actually becomes positive again. But look at what price it does it at. Again, keep in mind this price here. Highs at 36.75, lows at 34. Highs at 34.75 when this begins to change direction. Very interesting. So what is it telling you? All right. If you bought in here and were so courageous as to not follow the premium and just held it until we became positive again here, there would have been really no loss. Think about that. But we don't want to trade it that way. We want to follow the premium. Okay? We really do want to follow it. Now let's take that just a step further. Let's go over and look at another example of another day. How here once again we were positive until just about the same price where we turn negative, and it slopes down and gets back to a positive right at about the same price it turned before, and finally ran up in the last hour and a half of trading before it turns negative, and then she really begins to drop. Okay. Now in the last half hour, you got to watch a much faster read on the premium, particularly in the last half hour. You don't want to use the slowest of them because it's not going to respond very well. But just keep that in mind. Look at this again. Look at the raw data. You get a big move up right at the beginning, higher high. This is a lower high. Okay, this is a lower high. Higher high, higher low, lower high, lower low than the previous bar. So that's that little divergence there. That shouldn't be happening. This should be a higher low as well as maybe a slightly lower high, because of course we haven't gone in there. This is sort of what we call an Emini bar, and usually the following bar moves in the direction of the previous bar's trend, which was up. And of course we see that happen here. But then we get into that position whereby we have a lower high compared to the initial move up. So just follow the bars. Follow the bars. Oops, right there. Up, 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 up. Divergence. Divergence again. Should come up. Higher, higher. It does, but nowhere near here compared to here. Big divergence. Down we start to go. Until we reach a price point that's usually, we can see this on the matrix, on the volume profile. And there you have your divergence again, right in here. And up we go again. Until we get divergent enough for it to drop and start moving up again, higher and higher and higher, until we get to a divergent point here. So it's just a matter of following. Just follow it. Don't second guess it, follow it. So there you have a very basic lesson on how to read the premium. Keep in mind it's a direct relationship. When you don't see a direct relationship happening, the premium is giving you a heads up that something is about to change. And it's only by way of that this becomes a leading indicator. And sometimes it's a very significant leading indicator. Let's see if we can look at just one more example before we move into our next video. All right, now as you see this move up, all right, do you see anything in the premium here? And I'm going to ask you to pay attention to the lows of the premium. Do you see anything that doesn't seem to be fitting when it comes to the lows of the premium during this move up on the Spoos? Is there any bar that doesn't seem to fit? Now, if you looked at this bar, you'd be right. We have a higher low here, but a much lower low on the premium here. Shouldn't be happening. And what winds up happening? Well, we move up higher, yes, but then we come right around and come back to that price and even drop a little further. Okay? Now, on the way down here, is there anything, from this point, from that pivot here, is there any high on the premium that doesn't seem to fit? From this point here. Down to that low. Is there any bar on the premium that doesn't seem to fit? Sure, it's right here. Much higher high on the premium, but not a higher high on the ES. Notice what happens. Following day, we come right back up. Now, you can't wait all that time, but there's an indication there that something is about to change. Now, it takes a long while, and you've got to be trading with the trend, keep in mind, in order to take advantage of that. But that is something you need to take note of and analyze that as you look into the following day. Does this happen on a regular basis? Most certainly it does. Let's just see if we have another example before we conclude. Now, it's not so pronounced here, but if you look at this trend, again, between this point and that point, what bar on the premium doesn't seem to be fitting? Should be getting higher highs, higher lows. Now look at the lows. All right, when you're moving up, yes, you're looking at the highs, but you can't ignore the lows of the bar either, because the lows oftentimes give it away. Look carefully. This compared to this, compared to this, compared to this, compared to this, they're all higher lows, except for that one. Now, it's pretty close to the top of this move, but it's telling you, it isn't going to continue. It's coming back down. And in fact, it does. Now, it doesn't move huge, but believe me, that's very tradable. That's a very tradable move. Okay? Now, there's not as much to work with in this next move, but if you just look between these two lines and look at the premium, right? Is there any bar on the premium that doesn't seem to fit? And look at the highs this time. Okay, you may not see it real clearly, but it's right here. This is a higher high. That's an equal high. This is even higher than over here, where we had this move, or this high. Okay. That doesn't fit. So any move down, you can anticipate with the divergence, this thing is going to come right back up to that price. Now, what does that give you? 26.50 is the high. If you get in down here at around 22, that's a 4-point move. Nothing. Did you know that a professional trader hopes to make 4.5 points a day? 4.25 actually. Professional trader is just hoping for 4.25 points a day. Okay, so I think you see the point. Now, we've got an indicator to help you to read this more precisely, but right now you just want to get the general picture. That's what we've done with this video. We hope that it's helped. Let's now refine our thinking with our next video.